Assalamu alaikum. Good afternoon, good evening, depending on where in the world you are now. And welcome to this panel discussion organized by Euclid Management Consultants. And the title is Convergence 2021, based on the theme Financial Inclusion in the Digital Era. And today's subject is debt recast and bad loan surge in the COVID era. With us, we have three stalwarts from the world of business and banking in Bangladesh. First of all, we have Syed Mahbubur Rahman, Managing Director and CEO of Mutual Trust Bank, whom I have great pleasure in introducing as my successor at MTV, where I worked for 11 years nearly. And we also worked in the old ANZ Greenless Bank together. Also, he took over the reins also of another office from me, Chairman of Association of Bankers, Bangladesh. So he's like my younger brother, very dear to me. And I look forward to the discussions. Now, another very sweet younger brother is Naser Ezaz Bijoy. We were also together in Standard Chartered Bank, and Naser Ezaz Bijoy adorns the office of the Chief Executive Officer of Standard Chartered Bank in Bangladesh, where I also served for 21 years. And Naser is also on the board of the Metropolitan Chamber of Commerce and Industry, where I am his fellow director. So we have many common things. And besides that, we also have an extremely sweet relationship. And he has served overseas for Standard Chartered Bank in the Republic of Vietnam, in the Republic of the Philippines, Mauritius, and the United Arab Emirates. He is a credit specialist, one of the leading credit specialists, amongst other things, in Bangladesh, and absolute gentleman, both of them, of course. And that brings me to Fuad Hussain, another accomplished young professional in this country, who has worked in IDLC, where I and Mahbub also worked earlier. So again, we have a commonality. He also worked in Citibank Capital and Asian Tiger Investments, and then he forayed into entrepreneurship for a while before joining very recently the great conglomerate AKIJ Ventures as Director of Investments and Director of the newly floated AKIJ Life Insurance Company Limited. With these words, I welcome these three gentlemen and thank them in advance for taking out time from the extremely busy schedules to be here to lend their words of wisdom to this panel and for our listeners listening from around. So the subject is something which is extremely important to any country and to Bangladesh, especially in the light of COVID-19 pandemic, debt recast, and bad loan surge. So there are two parts of it. One is the surge in bad loans. One is how you mend it. What is the remedy for it? And fittingly, just a few days ago, the headlines of the Daily Star Bangladesh business was bad loans rise as payment, as holiday ends partially. You can see that. So they have the statistics of the latest position in the country. So I'll just read out a few lines. They have gone up substantially in the first quarter of 2021 after the central bank partially withdrew the moratorium facility. Then non-performing loans stood at nearly 100,000 crores. The figure was 95,085 crores in March, up 7.1% from 3 months earlier and 2.8% year-on-year data from the Bangladesh Bank. So let's say last year at this time, whatever it was, it's now 3% more. And we all know it's a scourge. It's an enemy of the banking system. The banks have to make profits, which I have always said. Sometimes people get very upset and say, banks are making so much money. Banks have to make money because they have the depositors' money. If they lose money, depositors get very jittery. Banks have to make money to pay the taxes to the government. Banks have to make money to pay a dividend to the shareholders. The banks are the ones who does the most CSR in the country and makes substantial contributions. So, and also, most importantly, I would like to say is that banks need a surplus for their capital. They need to increase the capital every day as their balance sheet increase. So bad loans makes a dent in the capital, makes a big dent in the profits. So it is the mission of every board and every CEO to counteract and arrest this bad debt rise in the country. Also, it needs the cooperation of the customers. They also have to have the good intention. So with those words, we'll like to say that restructuring is a very easy word to say, but it often means painful transitions, especially the change management that comes along with it. Sometimes the company is taken over by some other people. As bankers, you have to take a haircut also in your assets. You have to say that you will not take interest, you'll forego a part of the interest, you will not take the loan back in 3 years, you'll take the loan back in 6 years. So you make losses. So a question that I would now like to ask Mahbub, how are you now looking at debt restructuring in the light of COVID-19 and the partial withdrawal of the relaxations by the central bank? Because I also know your balance sheet inside out. And during my time, I have waged a campaign known as War Against NPL. It was always a very tough fight. You can never win this fight in all the time. So, and so many customers arrive, but I'm sure you're continuing the good work and trying to decrease it. So how do you now look at the debt restructuring? Mahbub.
Thank you, Anis bhai. And you have rightly said that what is the course of action we need to take as well. In fact, banking industry in Bangladesh is having a difficult time for some time. It's not like COVID only. I think also pre-pandemic time, we have seen that entire banking industry is going through a difficult process, almost all the banks. And one of the reasons is basically not only the NPL situation, we don't have the strength as well, the balance sheet strength, because the capital is very small in our country. And these are all a very fragmented industry we are in. So that's why for banks, since it's not highly capitalized and it doesn't have the strength to basically take the hit on its balance sheet. That's why you need to see, you get to see the lot of debt restructuring that take place. In fact, if you go by Bangladesh Bank circular, debt structuring or rescheduling can only happen when you get to see that the company can pay off. Company can, and they have given some certain guideline on the basis of which you can do the debt restructuring. But unfortunately, we don't do it because the fact, if you go through the guidelines, given guidelines of central bank, we will not be able to do a lot of debt restructuring as well. Now, coming back to the COVID situation. Yes, from March, when the COVID first broke out in Bangladesh, or we got the first detection in Bangladesh back in March 2020. And you know that the entire country almost went for a holiday for till May, till end May. And we also got a circular from central bank. Yes, the payment which will be coming due during the circular period, we will not be considered classified, or we cannot classify any debts. That's the thing. Any outstanding that is coming due, and we just cannot classify any debts. So basically, there was a moratorium that was given by central bank, which got extended till December 31st. So what happened, we have seen that many of the loans, which we knew that they would not be able to pay because of the central bank guideline, were considered as unclassified or a regular loan. And at the same time, we have seen that some of the, what do I say, that the real bad defaulters or the defaulter, willful defaulters also, we saw that they took shelter under that circular as well. So now come 31st December, as you were saying, citing the Daily Star, that yes, in the March quarter, we have seen that NPL has gone up from 7.67 as of December to now 8.something, 8.04, 8.05% as of March 2021. So already you can see with the lifting of moratorium, though there are the circulars are still there on the basis of bank-customer relationship, we can do some restructuring, but despite that, you have seen that the NPL has risen, and it is inevitable. In fact, because of the payment moratorium, we did not do it, or we could not do it. In many cases, we wanted to do it, but because of we did not do it. Now we can see that, and this situation is also expected to go back in the coming days, because you know that many of the SMEs, especially small ones and the medium ones, the low end of the medium ones, who have basically single revenue stream. And you know it very well that if these companies fail one or two installments, they will be in deep problem. So many of the cases, and we have also seen that many of the SMEs have got closed as well. And for them, it will not be possible to come back. And also at the same time, the stimulus that you have given, as per Bangladesh Bank circular, we know that some of the SMEs will not be able to pay it back. Even we have seen the stimulus that we have given to garments industries. They are also now asking for this extension of the period as well. So this coming is because of the COVID scenario, and we have seen that COVID could not be contained. While we have seen that it's coming down, infection rate coming down in the month of April or so, but all of a sudden it has risen. And again, we have seen it come down below 10. Now we can see for the last couple of days, the rate has already gone up. Infection has gone up. So for the fact that business to go on a normalcy or a continuity, there is difficulty. So I believe that there will be also even pressure on the balance sheet. And in respect of debt restructuring, yes, we need to do that. We need to do that. We have done, if you look at a debt restructuring that we have done in Bangladesh, one of the major restructuring that was done in 2015, when Bangladesh Bank circular came in, on the basis of that, some large loan, about 500 crore taka, were restructured. And we have not seen anything good out of it. Barring one or two, none of them really paid off. Some of them even didn't execute a document as well, forget about paying off. And then we have seen in 2019 also, there was another master circular came in on the basis of that certain debt restructuring were allowed on the basis of circular by saying, given a central bank. And we also do not expect many of them will not be able to pay in the coming days. So in fact, debt restructuring should be on the basis of cash flow. It's not like we have to do it. We have, for the sake of doing it, we have to do it. But some fundamentals needs to be observed, that until and unless you really do not see any cash flow or any sort of potential of the particular company, it's like you are extending the death. You're basically extending his spirit, but he's already in ICU. He's already in ventilation. You're giving a ventilation, you're basically extending the death. But unfortunately, because of the fact, as I said in the very early stage there, because of the fact that the balance sheet is very small, the capital is very small, many of the banks will not be able to absorb it. And that's why this is required.
Thank you.
Should stop it now. Maybe when I get chance, I'll talk more.
Thank you, Mahbub. From a very practical point of view, where you are waging a war against NPL, you have made excellent comments on the balance sheet size, that they're small, the banks are fragmented, and the capital is very small of the banks in Bangladesh. That's why we have always talked about mergers and acquisitions and making the power of banks, strengthening the power of the banks in Bangladesh. Now, I'll read out certain comments that you made in the Daily Star. They say that you, Mahbub, that banks had failed to treat many loans as defaulted in 2020 due to the moratorium. Lenders have started treating the loans as NPLs after the central bank withdrew the facility partially, which is something you said. He said, on top of that, some borrowers entered the defaulted zone due to the pandemic. The country's small and medium enterprises have been hit hard by the pandemic, and a good portion of the loans disbursed to the segment has already become NPLs, you said. The upward trend of defaulted loans will continue if we can't stop the spread of COVID-19. This is a comment you just made a little while ago. So thank you very much for those comments. We'll come back to you. Now we move on to the Chief Executive Officer of Standard Chartered Bank in Bangladesh, Mr. Naser Ezaz Bijoy. So as a foreign bank, you are doing extremely well. You have a very strong balance sheet. You have one of the best, possibly the best profitability in this country for any bank. So your capital strength is also very strong. And I know that your non-performing loan ratio is one of the lowest, probably the lowest in the country. So from your point of view, where you have such a healthy balance sheet, would you give us some lessons to us that how could we do better in the debt restructuring and what to do with the restructuring the distressed assets? Over to you, Naser.
Thank you, Hansbhai. I think it's a privilege to share the platform with you and Mahbub especially. You're not only very dear persons with very exceptionally wonderful human being. I've learned a lot from both of you in my career. So thank you for giving me the opportunity. I think debt restructuring is supposed to be meant for situations which are extraordinary. So if a company or a borrower is already in a situation that is unrecoverable, restructuring doesn't work. If a company or borrower is actually a willful defaulter, it's not going to work. It has to be based on a kind of a support to overcome a temporary phenomena, which was either beyond their control or any unintentional wrong decisions that has caused the temporary challenges in cash flow. So that is how it's supposed to be. It's never meant to be supporting, as Mahbub mentioned, it's not for someone who's already on in ICU on ventilator, and purposefully wrongdoing that has caused this default. So I think that's very important to differentiate this, because if you do not differentiate, then you end up throwing your good money behind bad, right? So it doesn't really help. So that's one thing. Second is that we look at restructuring of distressed asset in many forms. One is a very typical conventional way of extending the loans. That's one way of doing it. But I think there are different ways of doing it by having it refinanced by new lenders, having a new equity injection coming from new shareholders or the existing shareholders, maybe debt equity swap, breakup of the company, and then probably non-core assets, you dilute the or sell off non-core assets, have the equity injection, or simply having kind of a covenant waiver and reset of that to ensure there is no default. And default doesn't necessarily only mean payment default. It can be covenant default and other stuff also, right? Now, if you remember, in 2018, the IFRS 9 came into effect, and for banks like us who operate more than one territory, we need to comply with the IFRS 9, which is internationally accepted accounting practices, and that actually changed the way to recognize a distressed asset. Previously, it was specifically about incurred loss and taking a general provision on those which are not already distressed. But it has now moved to a significantly different model where the losses are actually calculated based on the current and forecasted losses based on macroeconomic fundamentals, right? So that is what is actually driving the change. So currently, the way we follow is actually there are three stages. One is purely which are current. Therefore, there is no default issue. Therefore, we only estimate expected credit loss based on 12 months probability of default, and we continue to recognize revenue against that. But the stage two is where the difference starts. It does not mean the company has already defaulted, but there are strong signs of credit deterioration. That requires under IFRS 9 to recognize the expected loss. Expected loss, it's not the actual loss, not the full value. There's a calculation methodology for expected loss over the full tenor of the loan, which means any term exposure will have a significantly more punitive effect on your profit and loss, because you need to recognize over the tenor. So if it's short term, you only have, it's similar to what you would consider for 12 months. But if you it is long term, then it goes beyond the stage one, and all the years of cash flow will come in. And the reason I'm saying that term loan becomes more punitive is because in Basel and in this IFRS, you need to do a discounted cash flow. Now, discounted cash flow means that if you have a longer term, your PV, present value, will be lower, which means there will be a gap and you need to recognize that as a loss. So that is quite restrictive. And stage three is when you already have an impaired asset, where you have to recognize revenue after adjusting the expected loss from your gross. So these three are the stages that we actually follow recognition of this. But obviously, this is for a regular scenario when there is a pandemic. Now, for pandemic, IFRS actually declared a revision or kind of amendment in March 2020, wherein they have mentioned that any significant incident of credit deterioration or increase in credit deterioration, it will not trigger the migration to stage 2 and stage 3 immediately, automatically. It will have to be demonstrated that this is not because of pandemic issues, or it is not supported by government. So if a situation happens when government declares a moratorium like it did for Bangladesh, it actually provides a provision for the banks to not to transition those or migrate those credit quality from stage 1 to stage 2 and stage 3. So that gives you relief, but that does not mean that you do not recognize anything. So there is under the Basel II second pillar 2, you have a supervisory review process where you have to have a assessment of a residual loss that where in which of those exposure are likely to continue to be in default even after the moratorium is over. And that is called expected credit loss overlay. So that's a decision that the bank board or executive committee needs to decide how to actually recognize it. So what it does, it evens out any material volatility of your profit and loss in the subsequent years. Like if we look at Bangladesh's scenario, if you do, many of the banks, I'm not saying all the banks, many of the banks met the regulatory requirement of provisioning based on the moratorium provided by regulators. So that's actually on the Basel 1, Pillar 1. But in Pillar 2, some of the good banks, some of the prudent banks have recognized the exposures where the risk potential is higher, and they have recognized some of the losses. We see the potential cliff effect coming in June, because after 6 months under the Banking Company Act, it is considered as default loan, and that's when you start recognizing this. So we believe that June is when you start recognizing those. So the manifestation of the asset quality actual health will be reflected in the financials of 2021 for banks, which, sorry, if you can kindly, yeah, thanks. So if you look at 2020's financial statement of the banks, it did not reflect significant losses, or actually, I would say it did not reflect the true and fair view of a financial statement, because those ECL overlays or supervisory SRP requirements, that has not been recognized in many of the banks. Not all, some of them have done it, but some banks didn't do it. So 2021 will probably show a true reflection of the health of the financials, and expected view is that there will be more increasing NPL in this year. Banks like us actually took the approach of ECL and ECL overlay, therefore the volatility will be less.
Thank you. Thank you very much. That was wonderful. And the way you explained the Basel supervisory process and the IRFS impact on the credit, loss calculations, etc., was very nice and very clear, and talks about your excellent background in credit. Yes, you're quite right. If the central bank had not given that moratorium, had not given those other concessions and delayed the provisioning, most of the banks would have gone into the loss situation last year, and they would have had erosion of capital. But then what will the business people do? Their business is shut. They can't sell their products. There are so many things they cannot do, like restaurants, for example, the service center. They're completely bogged down. Similarly, the tourism industry is completely bogged down. And manufacturing industry, many are okay, like pharmaceuticals are okay, food is okay, but there are other non-essential sectors who are suffering a lot. So those are excellent points, Naser, you have made. So now I will move on to Muhammad Fuad Hussain. He is a very busy person with AKIJ Group. He's in a vehicle now. So dear viewers, forgive us for the background noise that come from that horrendous traffic that Dhaka always has, even during a lockdown period. So Fuad, I will ask you about there is a lot of uncertainty and unpredictability of the likelihood of another surge in cases. So we have had a second wave already. Right. And in England, they were relaxing and taking away the lockdown on the 19th of June. Now, yesterday, their Prime Minister, Boris, came on screen and said that he has extended it for another month because of the rise of the Delta variant. And here we have in our bordering areas, the Indian variant, and already the first black fungus case has been found in Dhaka. So we are unsure how this will happen. So also the inoculation program will take quite a long time, the vaccination program, because we don't have a steady supply of vaccines yet. So under that circumstance, because of the surge of this uncertainty of sales in the future, you being in the manufacturing industry now, how do you feel large borrowers will be looking at in lines of restructuring? I know your company is very cash rich, so we may not need to borrow, but as a whole, what do you think from the borrower point of view? How will they look at restructuring?
Okay, thank you for having me here.
Yes.
Can you hear me?
Yes.
Because yeah. Okay, thank you. First of all, let me give you some idea about how we manage our finance during this COVID period. Well, yeah, as you mentioned, that AKIJ Group is a cash-rich company, and we are very we take extra cautious when it comes to managing our cash flows, and we have a great finance team to manage our cash flows and making investment decisions. And during the COVID period, the demand has gone down of our products. We have around 25 manufacturing units across different sectors. But by the grace of the Almighty, I have to say that due to efficient demand and production planning, our working capital has been managed well. So this is one of the crucial reasons why our company has not borrowed money from the bank in recent months. And also, COVID situation has proved to be a blessing for our group to some extent, because we have acquired 5 large companies from different sectors. One large rice mill, 1 steel mill, and 2 jute mills. So these the reason why we were on an acquisition spree was because those companies were facing difficulties in servicing their debts. So this has proved a blessing for us because we are cash rich. So the companies that we acquired, they were facing a lot of cash flow problems because of the pandemic. And
except for one company, I think. Except for one company, if you don't mind my coming in, Jonathan Jute Mills was cash rich. So they were an extremely well-run company because I know their owner extremely well from childhood. So except for that one, yes, I agree with your contentions that you're making about the other companies. But Jonathan also had a cash trove which you acquired.
Yeah, but we acquired another jute mill apart from Jonathan, and a very well managed steel mill, but it faced some difficulties for the working capital requirement, and also the rice mill. So this proved to be a very attractive investments for us. You see, so these are and what we in our experience, what we saw that these companies, despite having good market share, they made some wrong calls during the pandemic. So as a result, their debt level has gone up, and they could not ultimately service their repayments. And also there were a lot of accounts receivable in the market. So due to these reasons, there are opportunities in the market for companies like us, and we feel that during the pandemic, some more companies are approaching us for acquiring their projects.
It's wonderful to hearing you. Fuad, you represent a very well-run group who are very astute. The father, Mr. AKIJ, he established this company and left behind a great heritage for his sons who are all very able and taking it forward. And you are seizing in that, as you said, seizing opportunities of COVID-19 to acquire companies which are intrinsically good companies, but they have been not
temporarily
well-run. So you will look for optimizing these companies and taking them forward. Now, I will move on to the next part, and I'll come back to you for later on. If you have any points, kindly write it down. Dear listeners, thank you for tuning in. This is Convergence 2021. We are in the last panel discussions today, and the subject is debt recast and bad loan surge in COVID era. And along with us, we have the CEO and Managing Director of Mutual Trust Bank, the CEO of Standard Chartered Bank, and we have the Director of Investments of AKIJ Ventures. Now, moving on to the second part, so long we have talked about debt restructuring. Now we move into the stimulus package, which our Honorable Prime Minister and her team were very astute enough to announce soon after COVID started making its impact in this country. It was a 1 lakh taka package. And in the beginning, I know it was very difficult because no banker could go to the office. It was a very dangerous situation. The infection was high, and many of our close and near ones were dying. Even my own brother died on June 3, and so many other country personalities, leading personalities, perished from COVID-19. So there was scares. Everybody was scared. So under that uncertainty, this stimulus package came, and in the beginning, the banks could not do much about disbursement. But having come this far, it's now like 15 to 16 months, but banks have been keen to lend only to large borrowers. That has been the criticism made in the media and also by the business people, and less enthusiastic towards small borrowers. In fact, at a webinar, I heard a lady really go, to heated words about the small borrowers not being supported. And so the stimulus package couldn't reach to a level where it was expected. So Mahbub, we were trying to reach to a perspective on how your bank and your borrowers have responded to the stimulus package, so we can have a case study of the situation. Over to you.
I have to unmute that. In respect of stimulus package, I think it was 1.2 trillion, something like that, and it was almost like in terms of budget, it is significant portion of 4% plus, I think, of the GDP was given by the Prime Minister Central Bank. And I think in terms of announcement of the stimulus package was done in a very timely manner. Immediately after this broke out in Bangladesh, and the Prime Minister led from the front, as she does in many cases, on many occasions, the stimulus package came in. And in respect of the large loan that you have, a large loan or large customers, you have rightly said, the banks in general have achieved 100%. So is the case with Mutual Trust Bank as well. We have done 100% in respect of the large loans and in our industries. In respect of the small, medium industry, only few banks, basically, the time was extended a number of times, if you remember. And the last time was said that by March, it has to be met. No negotiation, especially in respect of agri loan as well as in respect of SME loan. And if you remember, there were some issues with the SME loan and the criticism that came up, as you have said, that yes, people are saying that banks did not respond the way they have responded for the large ones, which is true and also exactly not the fact. You see, in Bangladesh, if you look at it, the SMEs are dependent on the large ones. And the large ones are more structured, they have got more information. So definitely the moment it was declared, and also you remember that there are certain things that needed to be cleared. So by the time stimulus package started disbursement, I think it was middle of May or sometime after, because the country got open end of May. And then once it is done, there are also some issues with the SMEs as well, that some allocations were given, product-wise some allocations were given, and also the way it was done. So I think all the clarification that came in by the time it got done, if I remember correctly, I think it was sometime in October. Naser can correct me. It was sometime in October, possibly everything got cleared in the area. These are things that you can do. We can also do EMI sort of thing. And also in terms of product reallocation, there are some reallocation was also agreed upon. So, and also at the same time, we remember that last year we have got two long floods. And this because of floods, and SMEs have to be, these are all branch driven thing. So in many cases, branches were also not functioning properly as well. And also many of the customers got COVID infected. In fact, many of the bankers also got COVID infected. We were basically at the forefront. Entire bankers didn't have any leave. Even during the COVID time, when entire country was on a shutdown, bankers were there, especially the branch people. They were there to serve the customers. So they have not only endangered their life, they also endangered their families' lives as well. But despite that, we bankers went ahead in terms of giving services. We knew that without us, the economy will not move. So that I must salute the bankers for keeping the economy rolling as well, for giving the support, for braving all this thing. So the criticism that is people are doing, or they're looking from one perspective as well. I would humbly say, I think also that was need to look at the banker side as well, the issues that came up. But I think as of now, if you look at industry-wise, it is almost 75% of the disbursement has been done as well. And also the fact is that you need to also take into account, Anis bhai, you have been a veteran banker, you have been involved in so many things, you're also chairman of ABB. Not all banks have the same capacity in terms of SME management, SME loan disbursement as well. And also the same time, no banks has got the same level of appetite. In one of the discussion where our honorable advisor to the Prime Minister was there, Dr. Muhammed Rahman, he quoted the same thing. He said the target that was given to the bank should have been given considering the strength of those banks. Because if you look at the SME of mutual trust for that matter, when you looked at, I had difficulties in terms of meeting the numbers because the SME base that I have was not very strong. And there was a bad element as well. So I struggled to basically meet the numbers. So I had to do a lot of tweaking here and there. So I think that is what the many banks had to do in terms of agri loan as well, because in terms of through MFI, riding on the MFIs, it is easier. But directly giving a agri loan, you know that many banks do not have the expertise. They don't have the people as well. They don't even have the logistics to extend loan as to recover as well. So that is why it got delayed. And same thing happened to Mutual Trust Bank. Mutual Trust Bank is not an exception. Like if you look at Bragg Bank or some other banks, they have that expertise. In a couple of banks, I know that they even got their target enhanced, and they also met that. But most of the banks, in fact, more than 95% of banks had difficulties. So I think now that SME Foundation has been now tagged in, which is important. So it is not like banks could really do it, but I think I would say that we already have done more than 75%, and we are hopeful that by June, I think most of the banks will be able to meet the SME target as well as the agri target.
Okay, thank you. I think you explained very well, and I really like the way you explained the problems with the SME stimulus package distribution, and also the fact that not all the banks have the depth and capacity in handling SME loans and the expertise. And as you said, the targets that the central bank set, it becomes quite onerous on the part of the senior management team of banks. And some of the loans that went bad in Mutual Trust Bank, I'm quite aware that some of them were SMEs and some of them were in the north of Bangladesh, where the managers really didn't, at the end, we found out, didn't have the expertise to handle those and monitor. The main problem that I saw was the monitoring. They'll let them escape. So that is why the bank got saddled with those bad loans. I'm sure you're trying your best to improve the situation. I tried my best during my time. Now we move on to Naser, and we are so lucky in having Naser here because we get a different perspective. From Mahbub, we get one perspective, from Naser one, and of course from the, from the demand side, we get it from Fuad. So Naser, you represent a first-class international bank which is performing so well, and you have maybe seen various forms of restructuring packages globally. You have served overseas in so many parts of the world. So how do you now look at the stimulus package that has been provided to companies in Bangladesh? I think we'll have to now go into concisely into our questions and answers because we have some more ground to cover. So over to you, Naser.
So I'll try to be very brief. Basically, two things. I think both government and central bank has actually responded very quickly after the COVID broke out in Bangladesh. So I must give credit to that. If you remember, when before COVID started, banking sector not only had a problem with NPL, it also had a problem with liquidity. I think the interventions the government central bank has come up with actually provided a lot of liquidity in the market with repos, with reducing this, CRR, SLRs, and all those stuff. So I think it really helped the liquidity to be eased off, and that actually eventually provide the banks ability to support. Now, second point I would like to highlight that for Standard Chartered Bank, what we did was before the central bank's guideline payment holiday came in, we in the month of March went out and suspended interest application for the quarter of March. The reason we did it is because if we actually apply the interest, then the clients will lose the cash flow that's sitting on the account, and there is no sale process happening because of lockdown, right? So, but what we did in that 1 month period, we assessed individual companies, be it an SME or corporate, to understand how do we restructure based on the need. So we actually started this process before the market started. And then obviously when central bank came in with the regulation and we had to comply with it. On the particular aspect on the SME side, I think there are two stimulus packages where it was not implemented as much as we wanted. One was SME, the other one is MFI. So SME perspective, I think the challenge was one that it was very complex. The way the circular was issued, it was not as simple as it was for corporate clients. There are caps, inner caps, sublimits, and restrictions on what you can do. And the most difficult part was there is no guarantee that will qualify because it was actually left to the bank to decide. There is a reason why it was done, but then again, it became banks became a bit more apprehensive because if it doesn't qualify, then you don't really get the refund at that point of time. So that's another challenge we had. But I think the other markets which did better, and we tried to address that, and we were successful to work with central bank to introduce a credit guarantee scheme. Because when the risks are elevated, banks will obviously have a risk appetite and it will get restricted in a situation for pandemic. Now, as it is, SME is a higher risk. Your interest rate is already capped, and then risk is elevated. So banks are naturally to be more shy, and because they are dealing with public money, right? So they have to be conscious. So we, after a long discussion, we could get in principle agreement from central bank to have a credit guarantee scheme. I think it was with right spirit, but did not really achieve its objective because there are uncertainty on the settlement side. That's why it did not go through. There were a number of iterations, but still it's haven't picked up the way it's supposed to. This in other markets was a game changer because of the credit guarantee scheme, banks were comfortable reaching out to SME, and it could be a first loss guarantee structure, or simple 80% coverage or whatever. This actually accelerated disbursement, where we probably, in hindsight, we could have done better in doing that. Apart from that, many countries already had a asset management company structure, which is like asset reconstruction company. Bangladesh have come up with a guideline a bit late, but it is there. It has not operationalized as yet. This would actually help banks' balance sheet to become lighter, so that they can take new risk and progress with the disbursement. We also didn't have very vibrant capital markets, so the private equity firms could not really make the best use of it, as AKIJ did. I mean, there are loads of private equity companies who have invested in different markets, had the debt equity swap and everything done, and they could have an option to exit. But we don't have capital market for exit. The repatriation regulation was not really conducive for the private equity company to come in and have a exit plan. All those did not do well, and it did not achieve its potential. So I'll stop at that. I'll probably cover the other issues subsequently. But I think there are a lot more opportunities and a lot of things to learn. So if there's a second wave, we should definitely address those so that we can actually come out much stronger than what we have done in first wave.
Thank you, Naser. Yeah, you want to say something else?
Just to add to one, Naser has said the credit guarantee scheme. In India, sir, hello?
Yeah, go ahead.
They have given guarantee for 102,000 lakh taka, 102,000, and 100% guaranteed, and it was disbursed in no time.
Thank you. Naser, I'm very glad that you answered the question or the point absolutely to the context, and you really highlighted it from international point of view, and being around you over the last 1 year plus in various instances, various occasions, I've heard you speak with a lot of passion on the credit guarantee scheme, which you mentioned, which has not picked up in Bangladesh due to maybe being a first time and unaware, people don't know how to handle it, and all the other points that you made. And you said that it's a game changer in other markets. Regarding the asset management company, which we have been trying horse over the years to have asset reconstruction company, but we have that in India, which makes their balance sheets lighter. In Bangladesh, we're still to reach that point. I hope that comes. And you have answered the question on private equity firms, which I would have asked you in the next round, but you answered it in advance. But it ties in with the question. Now, moving on to Fuad. Now, you are on, as I said, you are on the demand side. So let's say what you are going to borrow money, do you think that banks are showing a cold shoulder towards especially small borrowers? From your experience, can you please enlighten us on this?
Yes, a lot of banks are approaching us to take loans for industrial projects, and the money is cheap now. The liquidity supply is huge in the banking sector, so it's a good time to borrow and implement project. To come into production next year if everything gets settled. But we also invested in some small companies in the consumer segments and in the agro sector who were suffering during the pandemic. So we injected our equity capital into those companies so that they can stay afloat, and we also help them to grow. However, the common problems that we faced for those small companies, that banks are not reluctant, are not interested to give them loan, especially during the pandemic, because they feel those small companies are more risky to lend. So yeah, these are the things that we faced, but we came to their rescue for some companies. So yeah, but because the loan is cheap now, I think banks should come up with different products for these small and medium enterprises rather than shying away from them. This is from my experience. I'm sharing with you. Yeah.
Okay. Well, thank you. From the next round of questions that I would ask you, I'll ask them once now. So because it ties in with what you just said, because you have bought companies, you have bought large companies. You just said that you also bought some small companies where you have, restructured them or infused your own capital, not really gone to banks. Now, the next, what I would have asked you later on is, as a large industrial house, how do you look at buying distressed assets of banks from these two bankers, for example, the senior bankers you have got with us, in areas of your existing business and building synergy to make it profitable? Like these two bankers, they may have certain companies who are not doing too well, and maybe you have an interest in those sort of assets. Would you be able to go to various banks and say, can you help us in buying these companies at a discounted cost?
Yeah, we are actively searching for we are actively searching for projects who are affected because of the pandemic, but otherwise they would have been good in their business. Yes, we are.
Okay, thank you, Fuad. So the question that I had, a more broad question on the private equity, Naser, is banks today are not fully equipped to carry out large-scale, complex restructuring like private equity firms. And you answered it, but will you like to add anything to that? Only private equity. You are muted. Naser, you are muted.
So yeah, I did respond to the earlier question with how private equity can help. The benefit of private equity is that it not only provides liquidity, it becomes a project more bankable because the leverage is substituted by equity, right? The debt substituted equity, so the balance sheet becomes much more better for a banker to take further risk. I just want to supplement to a point that Mr. Hussain mentioned. He mentioned about the pricing. Since the pricing has come down, banks should be able to take more risk. I think that's kind of counterintuitive because risk is pricing is a function of risk. So actually, if the risk, for the SMEs, the biggest challenge is access to financing. Not so much about the returns, because their operation model is different from the large corporates. And to the fact that lending to large corporate did help SMEs to some extent indirectly, because that provides a cash flow for the large corporates to run the ecosystem, which SMEs are part of, right? So it's not that they were totally shut off. It's just the indirect way of supporting the SMEs. But I fully agree with you that we need to be more innovative in terms of how we support SMEs, and there even regulator can play a role. and private equity companies, can definitely take stocks, equity stocks in those.
Thank you. Thank you. I think it is relevant to quote from the newspaper article from Dr. Ahsan S. Mansoor, who is the most quoted economist in Bangladesh today, the chairman of BRAC Bank and the executive director of Policy Research Institute, amongst many offices that he holds. And he says that default loans will escalate in the months to come as businesses are still facing slowdown. Many businesses are going through a hard time due to the economic slowdown, which pushed higher the NPLs in the first quarter. And they are also not keen to expand their footprint, except for groups like AKIJ, given the worsening coronavirus situation, meaning the depressing situation in the business sector would continue. That's what he says. And he also says that banks should fortify the provisioning base to absorb the shock deriving from the slowdown. So this I thought was contextual in the light of the subject that we've got, debt recast and bad loan surge in COVID era. So moving on to the next context, I think this one I will skip and go on to the last one. Restructuring is a very easy word to say, but it often means painful transitions and sacrifices on the part of both the bank and the borrowers. And the change management comes along with it. So as bankers, you have to take haircuts in your assets and, more importantly, existing businesses by taking losses in your books. So this is one context. So another context we've got here is that business is at an inflection point from relationship-based lending to empirical standards. Like a number of banks, like let's say 20 banks lend to the same group, and they have performed very well. And we know that some of them have huge, exposure, despite their having a lot of assets. So don't you think that we should now go for a balancing act where you don't burn too much and not selling too cheap and being held at ransom by these large borrowers because they drive your income down to even bare levels, to your cost of funds level? Even you cannot sometimes recover the operating costs, because I know that from experience how they push. And in fact, recently, the central bank has reduced all the commissions and fees by a great deal. So banks still need to make profits to be able to make those provisions. So Mahbub, so what is the good balancing act for banks where they don't burn too much and not accused of selling cheap?
Thank you, Anis bhai. You have raised a very serious issue here as well. As I said at the beginning, that we are over a banked economy. 61 banks, I think. I have stopped counting though. I think it was 61 banks now in the country, 61 scheduled banks. Now for an economy of our size, you can understand whether this is more or less. I think that the policymaker knows better why they're doing it. They have some insights which I don't have. But for me, I think if you really want to reach the people, we can always do it through expansion of branch network or through non-branch network, because things are changing now through automation, through digitalization. We can reach customers as well. Now that the issue, what you're saying, sir, that the banks have got targets. And many of the times I have seen the targets are set compared to the banks, your neighboring banks. The board of directors might say, oh, this bank has done this much of money, this much amount of money. Why not you? So you also need to make more money. So what happens in the process, these people go all out, and also at the same time, so they go all out for the large ones, and they just flooded them with limits. And he was somebody who needs maybe 1,000 crore taka, he will have 3,000 crore taka limit. So in the process of what is happening, that these people, sometimes how can you resist your temptation? Sometimes you start issuing checks against those accounts as well. So that is the thing. That's why these customers take basically a ride on you. I'm sorry to say that there is one customer there, was not all customers say, but most of them are saying. What they do, they come to me, yes, you're charging me this, I think that bank is charging me this amount of money. So you need to reduce the charge, reduce the interest rate. Everything is happening now. And on the top of that, Bangladesh Bank is from time to time, they come and say, you reduce this charge, you rate interest cap. Like, from April 2020, you have interest cap, 9%. It's the one size fits all for SME, where acquisition cost and monitoring cost is very high. And for the large loans where supervision cost is not that high in terms of the number of people you need to manage those customers. And for SME, you need more customers. So, but you cannot charge more than 9%. Yes, at this point of time, the market got excessively liquid. The market dynamics have brought it down. But this thing may not remain. The moment CRR is increased or your foreign currency remittance, what is you're getting, gets slowed down, and if credit grows, you'll have difficulties. Or government start borrowing heavily from the market. This trade liquidity will not remain there. So the thing is that, so everybody's taking this for a ride. But even if, and also at the same time, also the fact, I must also admit the fact, you cannot have good quality people. You're dealing with public money. You need 61 CEOs, 61 CFOs, you need good marketing guys, you need good financial analysts. So we also make commit mistakes there. So that is the thing. So I think what you're saying that they cannot take us for ransom, but that is what is happening. So market has to change, and that is why we need to focus more on SMEs. More on SMEs we need to focus on. We need to make our portfolio diversified. We need to change our mindset so that the one that you're talking about, they cannot take us for a ride. Thank you, sir.
Thank you. Dear viewers, thank you for tuning in and listening to us, Convergence 2021. The last panel discussions we are having, the series of discussions, debt recast and bad loan surge in COVID area. And this evening we have two veteran bankers and we have a professional from one of the largest industrial groups in Bangladesh. Now we are towards near the end. So what I would like to talk is about the future now. So Naser, you are very close to the central bank and you are always discussing with the governor, deputy governors, executive directors, GMs, etc. Similarly, Mahbub, you are also discussing as a former chairman of the Association of Bankers. So this dialogue, I think you need to enhance it because we need to know how will the regulator view debt restructuring. There's no doubt there has to be debt restructuring in the future. So in short, what do you think is the attitude of the central bank towards debt restructuring?
I think central bank is trying to address the immediate challenge and leaving the long-term problem to be solved for a later date. I can understand, the approach because I think it's also about striking a balance between the reform and the loss of confidence. So if you recognize entire loss or other delinquent portfolio immediately, then it will obviously have a huge erosion of confidence in the banking system, which is absolutely detrimental to the entire economy. So I think we have to be very prudent. And I've seen in other markets, banks do take central banks do take that position to ensure a long-term remediation rather than overnight reform, which generally many multilaterals will promote, but it may not be always the best interest of the financial system. So I think it's important to calibrate and recalibrate. Like, the point that in 2020 March, when central bank came back with the stimulus package or rather payment holiday, it was required at the point of time. But now, if you and it was a mandatory thing. Subsequently, it became banker-client relationship, and then so it will have to be recalibrated based on the situation. At this point of time, if we, God willing, if we do not go to the second round, second wave of infection on a great scale, then this is a time when we should start unwinding, recognize the quality of assets over time, and I think it's important to engage SRP, like in the second pillar, so that we do not have a significant impact overnight. I think I just want to add something. What you asked Mahbub bhai. I have a slightly different view. Pardon me for sharing that. I think it's actually should be always based on demand supply. I would not entirely blame clients because it's the bankers who need to have a risk framework or risk appetite framework. I do recognize their targets, but I believe the board should set targets based on return on equity. That is the international standard, not so much on the loan book balances, because at the end of the day, your dividend is paid based on after profit tax, not on the revenue. And the whole idea is to become more nimble, your cost structure needs to be challenged so that it becomes You can actually choose clients based on your profitability, because if you are competitive in terms of pricing, you obviously get better quality assets. So I think this is something I would believe that we all need to focus on return on equity rather than only revenue. It's not one or other; it's a combination of both.
Excellent response from Naser Ezaz about debt recast and recalibration, and to stress on return on equity and become nimble. And of course, cost cutting is extremely important. There's no doubt about it. In such an era, when there was the Second World War, when there was the Depression, the Great Depression in 29 onwards, 1929 onwards, everywhere people had to cut corners. And now that time has come that we cut corners very much. Now, going on to Fuad, it's nearly towards the end that we are. As a potential borrower, how do you see the response from banks? As a potential small borrower, I'm asking you a hypothetical question. How do you feel banks will react to your request for support at this stage? Fuad, on to you. Well, I think he's got snapped because he's traveling. So we'll continue. So we are at the end. So what I would now really like to do is not really ask you a pointed question to the two veteran bankers that we have amongst us. Just I would like to ask that in the next 3, 6, 9 months, how do they look at managing the debt problems that you have in hand in the next 9 months? So first, Mahbub, please.
Thank you, Anis bhai. Just to add to what Naser has said, I truly agree, absolutely. Because I also worked multinational banks, the basic that I have learned, the multinational bank, the risk-weighted asset and everything has to be looked at. And also the risk return on asset is very, very important. It's not like lending. But unfortunately, Naser also knows, being in the market for quite some time, he knows how the market basically works. I definitely appreciate, I hope that everybody comes on that thinking process at the same time. That's very, very important.
I'm sorry, I missed it. Sorry.
I'll come back to you, Fuad. So we're listening to Syed Mahbubur Rahman now.
So, Anis bhai, what basically we need to do, I think each and every banker should need to look at his and her portfolio very carefully. They need to be very close to the customer. They need to understand each and every customer problem that basic and accordingly act, because the banking is nothing but supervision. Why multinational banks working the same market is doing well? Because they have got some process in place. And when we do give loan, we need to understand who are giving money to. Because at this point of time, also we need to grow as well. It's just not like managing your own portfolio, you also need to grow. So that's why I understand that with each and every relationship manager, each and every bank just need to be more rational in terms of setting their goals. They need to understand the market, how the COVID is going to take shape, and also need to understand the industry as well, which industry they need to go into. Because post-COVID, I think there is a lot of change of face will happen as well. You will get to see that dynamics is going to change. So there could be paradigm change as well. Like you can see that people are in this pandemic time, there has been leapfrog in terms of automation. Among even the government banks have taken leapfrog as well. So I think we need to look at those avenues. How can you basically use the automation more effective and efficiently to reach the customers? Because as you are saying that we need to also be, I will not say cutting cost, I will say we need to be rationalized. We need to be more efficient in terms of managing our cost. It's just not adding people or just not adding chairs and tables. We also need to do things more efficiently, because coming days we need to be more efficient. So that is what I think we need to look at to become more effective, more efficient in terms of also increasing our ROE and ROA as well.
Thank you. In very few sentences, you answered a lot of questions and really added value to these discussions. And I really like that relationship managers must understand the markets where they can go in. There should be a paradigm shift. They should rationalize cost efficiently. And also that most businesses around the world, including Bangladesh, have had a leapfrogging in their automation. Like we are having this webinar through automation and the digital platform. And that also ties in with our Prime Minister's vision of digital Bangladesh. So Fuad, very shortly, because we are at the end, I'm giving you a hypothetical scenario that you are a small borrower. You said that you have small. Say you don't have the equity type, pressure that AKIJ Group has. So what do you think be your chances of getting good finance from banks, small borrowers?
The chances are very low, I would say, especially during the crisis, because I also have a few small companies which I manage, and I see that it's very difficult to get loans or credit facilities from different banks. It's very difficult, especially during the pandemic, because banks think that they are more risky to lend. So, yeah.
Okay, I get your point. So I can feel your anguish because you still are part of a large group, and I am wondering about the other unknown groups who are weak and don't know people. So, but I'm sure we have good bankers, and they have their targets of SME loan disbursements. Otherwise, the central bank penalizes them. I'm sure they will find ways through the branch network, and now they have agent banking centers, they have sub branches, so the outreach and financial inclusion is far better. So now the last that I'll now move on to is Naser. There is anything that you would like to add, Naser, at this point?
Yeah, I think I'll just add to what Muhammed mentioned. I think this is a time when we need to be even closer to the market. Relationship manager or everyone actually needs to observe the market more. I think there should be a process to identify early, what we call in our bank called early alerts. That needs to be institutionalized so that we can understand the challenges and address it before it becomes too grave. The good news is that because of the restructuring or even providing the leeway of having longer term, longer tenor for clients, as well as lower cost of fund, many of the companies are now much stronger, and we've seen a deleveraging of many of the large groups also. So this will probably stimulate, investments once the COVID situation gets better. But I think from government perspective, there a lot has been done to support the supply side of it, like the lower cost and stimulus for the large corporates. I think it's important for the government to identify how do you stimulate demand. If the demand generates, then the SMEs will get opportunities, and then things will actually start rolling much faster. Then we can have a V-shaped recovery. Current view is it's going to be a K-shaped recovery, which means that the larger companies will become bigger, and smaller companies will probably struggle to survive. So we need to address that this doesn't happen, because large part of our employment is in the SME sector.
Thank you. Thank you. I think you made some very good points again about early alerts and stimulating demand and the K-shaped recovery. So, dear viewers, thank you for tuning in to the last panel discussions of Convergence 2021, organized by Euclid Management Consultants. And our subject today was debt recast and bad loan surge in COVID area. And we had two veteran bankers, the Managing Director and CEO of Mutual Trust Bank Limited, Syed Mahbubur Rahman, and the Chief Executive Officer of Standard Chartered Bank Limited, Bangladesh, Naser Ezaz Bijoy, and the Director Investments of AKIJ Ventures Limited, Fuad, Hussain. We have hosted here in this session and all the other sessions that some of us also attended by Tirtham Dev, who worked relentlessly to get everything together. I know it's a very hard job. So Tirtham, I have my great appreciation for your persistence, for your perseverance, and for your endeavors. So we thank Euclid Management Consultants and you for organizing this, and the three gentlemen whom we have heard very wise points and discussions we have had. I really thank them for taking our valuable time on an evening like this after a hard day's work, and wish you all the best to you and your families, all of you, including Tirtham, and to all the COVID people. We have lost a lot of people to COVID-19. We wish them, the salvation of their departed souls, and we wish that those who are sick, they get well soon. And while we are outside, we must obey the guidelines, wear a mask, and social distancing we must observe. So with these words, wishing everybody good health and prosperity, I hereby declare this session closed. Thank you.